Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets on Wednesday the 6th of May. European trading session been a bit fluctuating but has been driven higher by the services PMIs out of the Eurozone. Basically all pretty much coming in better than expected. The big headline would have been the Spanish services PMI jumping well above expectation, then to the highest level since November 2006. PMIs for Italy and France also beat expectations. Germany had a slight miss, but across the Eurozone as a whole, there was a slight beat of expectations at 54.1. So that European data continues to improve, and that has helped to drag the DAX and the CAC higher today. DAX is had opened lower actually, but is now 0.8% higher on the day, and that's sort of reversing some of the losses that we saw yesterday. Those losses came about from a sharp deterioration in the US trade balance actually, that drove euro dollar higher, and euro dollar continues to have a negative correlation with the DAX, although today, in light of this services PMI data, the euro is actually and the DAX are actually sort of not performing in that negative correlation, but generally speaking they have tended to be in the last few days. Now the euro has remained strong, and that is continues this sort of recovery in the euro in the last few days, and that is sort of reflected in this deterioration in the dollar index. Now that dollar index is right on that uptrend that's been dating back all the way to July, when that big dollar bull run began. 10-month uptrend is now that continues to be tested, and you can see that continues to be the case today, putting pressure on that uptrend. So it'll be interesting to see if that uptrend can hold and can maintain, or starts to break down. The other thing I wanted to point out was this rally in the oil price continues to move higher. In the last couple of months, really, we've seen the WTI price consistently pushing higher, using this uptrend and breaking out above that key resistance at $54 area, and it continues towards that $65 breakout target. All the data is on my morning report if you care to read it. What we've got to look out for today: service sector PMI for the UK. And that comes out at 9:30. That is expected to come in slightly down, 58.5, but not too bad there. Still fairly strong, still pretty decent in terms of the service sector, and it'll be interesting to see if that can maintain that move, because the service sector was one of the reasons why GDP was a bit disappointing in the UK in the first quarter, but certainly last month, and potentially moving into to this month as well, that service sector PMI data has improved slightly, so it'll be interesting to see that should feed through to an improvement or improvement on the last month's Q1 GDP, or last quarter's GDP I should say. And then into the afternoon, we've got the US data. You've got the ADP employment report that comes out at 1:15. 200,000 is the expectation there, so an improvement on the last month's 189. 189 being that fourth month consecutive in a row of decline, and also heralded the non-farm payrolls deterioration as well. So a slight pickup in the ADP employment report expectation, and that could be a lead through to the non-farm payrolls on Friday. So give that a look at 1:15. You've also got the crude oil stocks, which the last few weeks have shown quite a significant decline actually, to walk back towards flat, and 1.5 million is the expectation there. So it seems as though that supply is beginning to be curtailed, and that is obviously seeing through in the oil price that continues to rebound. So interesting data there. And then the only other thing we've got to look forward to today is a couple of Fed speakers. Actually, you've got Janet Yellen and Dennis Lockhart both speaking today, so have a look at those and see that could have an impact on the dollar this afternoon as well. So lots going on to impact. Now that takes me to my chart of the day, which is the Kiwi, and sorry, excuse me. Sorry, the Kiwi dollar has been under pressure. Actually, that decline today was driven by the unemployment data overnight, which came in much worse than expected, 5.8% up, an increase to 5.8% in that Kiwi unemployment, and that drove the Kiwi dollar lower, and that has continued today. That sort of now takes us to sort of, well, certainly it confirms the breakdown of these supports that we've seen as 75.35 and also around 75 big figure. That spike low today at 74.57, but it certainly looks as though it's continuing to come back towards this sort of 74 figure area. The interesting thing I saw here is the RSI, which is actually at a 7 to 8 week low, as are the stochastics. MACD lines beginning to gain a little bit of downside momentum, although still positive, so nothing too significant. But I think what we're seeing is probably a continuation of this range, really. I think it's probably going to now come back towards the bottom of this range. What we've seen overnight is this, as I said, this breakdown of these supports. I've put 75.40 here because it's sort of is the sort of support that you got from 23rd, 24th of April that got broken down. It became a resistance, interestingly, on the 1st and the 4th. Although there was a slight spike above that, I still think that that is sort of now a resistance band between 75 figure and 75.40. So what we've had in the last couple of hours is a rebound into that resistance, and I think that could well be used as a chance to sell. I think anything between 75 figure, 75.40 could well be your selling opportunity in order to come back to test these lows that we had back from April, because it certainly looks as though it's beginning to roll over, and certainly the momentum indicators as well suggesting a little bit of downside. But as I said, I think it's probably going to be coming back to form a bit of a range play on this Kiwi. The near-term deterioration would certainly be aborted, I think, on a move above that 75-77 reaction high that we saw yesterday. Okay, so that sort of wraps me up, really. Join me again for my Euro-Dollar chat, and I will speak to you in a bit. Thank you.